Germany garnered strong demand to cover its offer of 2-year debt Wednesday, despite a possible subsiding appetite for safe haven bonds after Moody's Investors Service MCO plus 0.95% surprised investors by keeping its Spain rating at investment grade, bolstering demand for assets perceived as risky. At the last reopening of the current 2-year German benchmark, Germany sold for €0.189 billion $5.45 billion of the Treasury note, known as Schatz September 2014, which carries a 0.00% coupon. The German finance agency's €5 billion offer attracted €8.465 billion in bids. The finance agency retained 16.2% of the offer for market-tending purposes. Thank you for trying verbose. This recording will go away once the product has been purchased. A smaller proportion than at the previous 2-year debt auctions. The retained tranche will be sold later through the secondary market. The average yield was 0.07%, up from 0.06% at the previous auction on September 19, reaching the highest level at auction since the June 28 tender. At that auction, Germany's 2-year borrowing costs were 0.10%. Before the auction, the yield was trading at around 0.08%. In another sign of a well-received auction, the average and minimum accepted prices matched, with both at 99.870. The auction provided investors with an "thank you for trying verbose. This recording will go away once the product has been purchased. Opportunity to buy German at cheap levels to the other AAA-rated countries," said Jens Peter Sorensen, chief analyst at Danske.ko -0.94% markets, noting that German spreads versus the French and Dutch 2-year segment is closer to historical lows. He said the auction also provided an opportunity to buy German government bonds at a cheap level relative to swaps. "We still prefer Germany relative to the other AAA countries in the front end of the curves given the liquidity and the safety of German bonds relative to the risk of renewed tension in Euroland. Then it is a thank you for trying verbose. This recording will go away once the product has been purchased. Very cheap hedge to buy," said Mr. Sorensen. The auction came ahead the German government's presentation of its new autumn economic forecasts. While the previous forecast for 0.7% gross domestic product growth in 2012 might be revised marginally higher, earlier GDP projections of 1.6% for 2013 are too optimistic, with a general weakening of global growth estimates and a deterioration of the Eurozone debt crisis in the meantime, said Commerzbank CBK.XE. Plus 1.93% analysts. The Moody's decision will remove some pressure from Spain's Thursday bond auction of up to €4.5 billion. The 3 Spanish "thank you for trying verbose. This recording will go away once the product has been purchased. Bonds being auctioned maturing in July 2015, October 2016 and January 2022 are trading at lower yields Wednesday than at their September auctions. Moody's confirmation of Spain provides near-term relief with Spanish government bonds staying in all indices, Commerzbank analysts said. Had Spain been downgraded to junk, it would have been bumped out of key bond indices, forcing the funds that track those indices to dump Spanish bonds. The analyst said, however, that many political loose ends remain regarding the situation in Spain, Greece and Cyprus, and few of them are likely to be dealt with. Thank you for trying verbose. This recording will go away once the product has been purchased. Ahead of the upcoming European Union summit on Thursday and Friday, analysts at Citigroup C+1.58% said that despite fundamental uncertainties, they see little evidence that Thursday's auction shouldn't go well. However, primary market success does not mean an end to the wider economic problems Spain continues to face, said strategist Peter Goetz. Expecting that spreads between German and Eurozone peripheral sovereign bonds will at the end narrow, Johannes Fear, chairman of the advisory board of Johannes Fear Asset Management GmbH, said investors of long-dated German debt could sell their holdings. Thank you for trying verbose. This recording will go away once the product has been purchased, and instead buy South European peripheral bonds which currently trade at yields above 5%.